Hello there. Today we'll learn how to make an accounting journal entry using rules of debit and credit. I know some of you are already thinking that sounds familiar. Sounds like terms I heard from a bank. Well, I just want you to erase all that knowledge you already have on these two words. Instead, today we're gonna relearn the two words. Just like treat it like as if you're learning brand new language. Like when I came to United States as a little girl, long time ago, I had to relearn the entire language again, from alphabets and learn how to write my name, all that. Maybe some of you went through that, or maybe you haven't. But accounting, in the world of accounting, the rules of debit and credit is like a language. We have to learn it. It's a brand new language, and that's the language we use in the world of accounting. So what it means to say debit and credit. Debit means, all it really means is the left-hand column of that's sitting on a journal. So what is the journal? This is the sample of journal we used to use before we started using accounting computer software. You could see that left-hand side column, we call it debit column, and then right-hand side column is the credit column. So I just transcribed that two columns on the board. The debit column is just the one that's sitting on the left-hand side, and credit column is the right-hand side column. That's all it means. There's no like mysterious meaning behind these two words. Debit means left-hand side, right means credit side. Credit means right-hand side. So how do we use these two columns? Okay, I got it. Left-hand side, right-hand side, debit and credit. Okay, what do we do with it? Okay, that really depends what you want to enter into this journal. If I am to enter business transaction that has to do with, say, asset account, what could be under asset account? Cash, maybe, equipment, building, land, car, all that could be an asset. If our company had a transaction that had to do with asset, okay? Or expense account. What could be expense? Utility expense, gasoline expense, clothing expense, I don't know, cleaning expense, supplies, rent expense. Then if you are making any entry that has to do with these type of accounts, then when we put under debit account, that means the account balance went up. That's all it means. So say our company just made cash. We earned cash. My customer gave our company cash, $100,000. If I put that 100,000 here, right here, and put which account? Cash went up by 100,000. I put that amount under debit side. That's the way of saying I'm saying cash went up by $100,000. Instead of writing all that down, today our company made $100,000. We just put it under debit side. By doing that, you and I, who understand rules of debits and credit, understand, our company just made $100,000. Cash came in today. Cash went up by $100,000. If I were to say cash and put it on the credit side, that's the exact opposite. It's to say we just spent cash. The cash balance went down by 100,000. We purchased supplies today, and the cash decreased, went down by 100,000. By putting either debit or credit side, we could know what had happened to this account. So we follow that rule under asset or expense. But if you are to make an entry that has to do with revenue or liability or equity or capital, then it's the exact opposite. To make it go up, we put it on this side. So what if I put increase of revenue by 100,000. We had a sales. We made some sales today that was worth $100,000. That's the way we use rules of debit and credit. If we are to say accounts payable is type of liability. That means I owe my supplier. I purchased some goods today from my supplier, but I didn't pay that supplier today. But I told him that I will pay him next month. So I have a liability. If my liability just went up by 100,000, I put it under credit side because these three types of accounts, for these accounts, we put it on credit side to notate the balance of these accounts went up. And if it goes down, I put it on the other side. So if I pay off my supplier next month, then I will put it under debit side because I just pay my company and my liability went down. So okay, let's make a journal entry using this rule. So let's just pretend. Okay, so what could be the simplest journal entry that we could enter using debits and credits? Okay, maybe some of you went to coffee shop today before coming here and bought a cafe latte, a cup of cafe latte with some whipped cream, maybe soy milk in it. Okay, let's say you pay $2 on it. From that coffee shop's perspective, the company just made $2 by making a sale to you a cup of coffee. So this company just had an increase on cash. If the coffee costs $2 and the customer paid you $2, then the company just made $2. It has an increase on cash by $2. So we put it on the debit side because these two, we put it under debit side to notate these are increasing. The balance went up. At the same time, what else happened? We also made some sales. So revenue went up too. Revenue went up, but we're not going to put it on the debit side, but we're going to put it on the credit side because the rule says if you are entering any business transaction that has to do with revenue or these items, we're going to put it on the credit side. So that's the simplest transaction we could make. What if we did the Starbucks or the coffee shop made a sale on the coffee, but what if the customer did not pay cash, but it was on a credit? That customer has a credit with us, and that customer could pay that money not this month right now, but tomorrow or maybe next month. Then that's a type of, we call that accounts receivable. That means my customer did not pay me today when I made the sale, but that customer will pay next time. It's on credit. So we call that accounts receivable. This is the acronym. It's a type of asset because eventually I will collect the cash from my customer. So it's still under asset. So we still follow this rule. To make it notate this account went up, we put it under debit side. So AR went up and revenue went up, right? What if my company went out and spent some money? What if we purchased some supplies? What if we purchased a bag of cups? Maybe it cost us $50. Well, when we spend money, what happened to cash? Does it go up or down? Cash went down, right? We spend money and we pay to our supplier for a bag of cups. I just spent $50 and it went down. So instead of putting on the debit side to notate it went up, it went down. So we're going to put it on the credit side. But what went up? When I purchased that cup of a bag of cups, what went up is my supplies went up. So it's an asset, type of asset. So supplies went up. So asset follows, normal side is debit. Normal side means that's the column we put the number to make it go up. And these normal side is credit. So we could make a journal entry like this. What if I did not pay cash? What if I didn't pay cash for the supplies, but we said, hey, we'll pay you next month. In a month, because I have a credit with you, we have a term. Then what happened was I didn't pay cash, but instead I have increased liability. AP means accounts payable. Accounts payable means it's the money that I must pay to my supplier, not today, but in 30 days, when the due date comes, I will pay that money. So it's type of a liability. So we're going to follow this rule. These items are normal on credit side. So accounts payable just went up by 50. Voila, we just made like several accounting journal entry. So how do you guys like it? Can you do this? Should we practice more? Okay, let's look at more examples.